Thank you. Good morning. Morning, everybody. Can hardly see you over there, but hopefully you can hear me. So yesterday, I gave a presentation titled Startup Funding Plus AI equals ? In it, I showed that global funding to travel startups is at its lowest levels in a decade at 2025. 2025 is off to a slower start than any other year so far in terms of dollars raised, while deal count is also down a lot from the past decade, but as of now, this year, it's on par with last year. Maybe 250 rounds we'll see this year. So yeah, we have that slide up on the screen. Anyone see my presentation yesterday? Okay, yes. Great. So what I speculated was that there's a lot of factors at play here. So, core AI companies are taking up a lot of the funds, especially recently. AI is causing a lot of uncertainty about the future. There's high interest rates, there's a soft exit market, there's economic and political turmoil. And then I also acknowledge that our data may not be capturing that there are a lot of bridge rounds happening out there that aren't publicly announced. So the data may not be fully representative. So starting with Suzanna, what is your reaction to these numbers? What's your take on the state of fundraising in travel at the early stage at this point where you operate? Absolutely.
Happy to start. From our point of view, not as it being a strategic corporate investment program, what we're seeing is actually very, very strong deal flow. There's on startups coming in with new ideas powered by AI. Right? So arguably, at the moment, everything that we see is AI. And I would even suggest that there's a bold idea that 100% of the investment is on AI, because every company should be using AI, including startups. No? For us, so we have actually started the year quite strongly. We've announced 2 investments in the last 6 months. The latest one 2 weeks ago into a generative AI startup trying to tackle the call center productivity challenge, and the name is Acai. And the other one is a German-based hospitality space startup called Hiver, looking at helping hoteliers to manage RFP processes for their group and meetings bookings. So overall, we are seeing more and more applications on verticals in departments where they are solving real-life problems and is bringing a lot of very immediate benefits that adopters are already seeing right away. But your take on why the numbers are down so much versus the past decade? Well, I think you touch on some of those topics, and also maybe some of the rounds are not being reflected. But overall, I think we're still seeing deals being done, in the beginning of the year. So I'd say maybe we are expecting a pickup towards the latest part of the year. Okay, and Toni, your take at the early to mid stage?
No, I found super interesting the numbers, and unfortunately, it makes a lot of sense for the things that we're seeing. Reason being, 21 and 22, for me, they were not the best years. For me, they were the worst because the rationality of the numbers behind it were not justified by the fundamentals behind it. And in the industry of VC, a lot of times what we see is that the best vintage, meaning the years where you invest, tend to be the ones where the valuations are the low. Over the 5 or 10 years span, those are the ones that has the higher return. Because the return typically is not on the valuation of the companies, but on how much you put in, how much you take out. This return on capital is what should matter. So this rationality that we're seeing now, I think makes a lot of sense.
The valuations were inflated. They seem to have normalized now, but is it still kind of a hangover from that period?
I think now they are correct. I think they were incorrect on the 21st and 22nd. So that was irrational because a lot of the movements that we see with the COVID were affecting, and we're seeing some strange dynamics that were not justified. So now I think made a lot of sense return-wise.
Yeah. Okay. Christoph, at the mid to later stages where most of the dollars and the euros flow?
I think your slide, which you presented, really reflects our, let's say, investment over the last 10 to 15 years exactly in the same way. So when I reflect, we have invested early days into Airbnb and GetYourGiant.
Sorry. Yeah.
Oh, sorry. Can you hear me now? It's better? No.
Yeah.
No?
Shall we? Can you hear me like this? Okay.
Just speak up.
So I was about to say that the slide Mike presented reflected our investment behavior in the past, because we were heavy investor into B2C in the early days. So maybe you remember we invested early into Airbnb, Get Your Guide, Home to Go, Lime Home, and others, all B2C related. These companies are all profitable now. They don't need any more funding. Then if you look on the B2B side, which I think is more interesting, there you see that the toolkits for travel are less travel specific as a vertical. So especially on the AI agent side, you find toolkits in terms of API connects, which are okay. You find toolkits which are less vertical specific. So when we invest into agentic AI, these tools are often not dedicated travel. And I think that's a trend that tools, even for dynamic pricing, where we have seen some activity in the last years, are also used in other verticals. So that's why I think the chart is reflecting B2C, let's say being careful on B2C, because the marketplaces and others are not easy to forecast what will happen due to LLMs with marketing efficiency. Do we need marketplaces in the future in the same way as we have needed in the past? So on the B2C side, there's a lot of uncertainty, and on the B2B side, in my view, it's less, I have to say so, it's less valuation topic. It's industry agnostic tools which are used for travel, but not shown in your statistic as a travel tech investment.
Yeah, okay, yeah, that's very helpful. Now, a year ago on the stage, one of the things I talked about was that a lot of new funds were being raised. Lakestar raised a new fund, announced in 2024, so did Traveltech. So I was optimistic that those funds would be being deployed this year. It's not what we're seeing, though. So staying with Christoph, so last year you closed your early 4 and your growth 2 funds. You have started deploying them, but not in travel. So you kind of just addressed that, but talk a little bit more about your plans for travel.
Yeah, I want to be realistic, and I think this is not a bad news, but at the moment, so where we are investing, it's a lot in healthcare, a lot in fintech, let's say enabling fintech in, let's say, less fintech-related startups is a big trend we are following, and space tech. So these are, and even resilience, defense. So these are topics which are, let's say, at the moment where we see a higher return on invested capital than in travel, in dedicated travel. But that is something which can change over time. I'm not pessimistic on travel at all. I have to say all the companies, all the travel companies we have in the portfolio are in good shape. So they have turned into profitability, which is, I think, something quite important. But if you look into a kind of return investment perspective, multiple perspective, at the moment, to be fair, we see other segments where we are more bullish on than travel at the moment.
Okay. Sounds like a lot of uncertainty about travel then, which I do want to...
No, but not on the travel needs and travel behavior. The fundamentals are fine. But the toolkit, as I said, I think the toolkit is getting more generic on B2B side. And that's why investing into a dedicated B2B travel startup, I don't know whether that's the right decision at the moment.
Yeah, okay. And then Toni, so you have the Traveltech 2 fund. So what is your plan for deploying that?
Well, first of all, I do agree with B2C. It's a very competitive market where the usage of capital is very high, and I think that some of the incumbents are really some companies are impressive in what they're doing. So it's complicated to get a good return there. I also agree in the assessment of the B2B. Now, I think this industry is still so big, and especially when it comes to things like AI, Amadeus, you guys started in the GDS industry back on the 80s. So it's like we invented last year. No, we invented on the 80s. The first transactional websites from late 90s are in the travel industry. So it's an industry that invests very heavily on the technology. So a lot of things are happening. That's why we still believe that things like pricing, for example, indeed it can be horizontal across different industries, but the need of the market is so big that there are some companies that will still be specialized, and that we still believe that B2B SaaS in industry, it's an industry that will grow massively still.
So that'll be the focus of the fund?
Absolutely.
Right, okay. And Suzanna, you invest from the balance sheet, right? And you talked about the 2 investments you recently made. How about going forward? What are you looking at?
So
going forward, what are you going to invest in next?
Right. So on our end, obviously the AI-like terms would still to be on the table. I would say it's really looking for benefits. To say so what kind of customer pain points, traveler pain points are the startups solving. And what kind of value propositions that they are bringing to our travel ecosystem. So that fundamental of startups needing to solve a real problem would never change. Right? And from there, how can you derive value? How can you deliver value to the people who's going to pay you? Looking for that new business model. So overall, looking at starting with that as a principle and overlaying the technologies that we are seeing. We continue to see a lot of opportunities around the business travel. I think business travel has been an active space. We're seeing a lot of innovations that continue to be coming in from the payment space. From yesterday, we've seen a lot of presentations around insurance. So overall, that end-to-end journey it's still where we are focusing on as a technology partner for the industry.
Yeah. All right. Thanks. So another slide from my presentation yesterday showed how the share of global funding raised by travel startups has shifted dramatically to Europe in recent years. I think we can put that slide up on the screen as well. I pointed out that it's mostly because funding in North America and Asia Pacific has dropped a lot, while Europe really has held steady. But Europe is not known for its appetite for risk capital or regulatory stances. So why is Europe holding up better right now, and are things really changing for the better here? Anybody?
Happy to start. I think it's just linked to what I've just mentioned. Is about solving real problems. I think looking at the European travel space, there is slightly higher fragmentation that we are seeing in the market. To say that, I was trying to look for data. To say the number of international arrivals into Europe, it's like 50% of the global tourism industry. According to UN tourism data. But in terms of the money that is generated, it is a lot less in terms of shares. So how are you going to deal with this number of of tourists? Maybe with a smaller pool of value to be shared. So I think there's a lot of innovations and opportunity to experiment with new technologies and new ideas to be able to bring more values into the system. So I think fragmentations and the economics of it as well. I think in general, the valuations of the European ecosystems is at a level that is lower than the American peers. Over here, the cost of development I think it can be a source of explorations. For a lot of the technology companies located around the world as well. So, I think those are some of the factors that I think can contribute.
I think I'm just looking at the slide and trying to read something out of it. I think let's take APAC. If you think about Cloak, that was a 100 million round. So that was there. By the way, there are only 2 rounds, if I remember correctly. Flyer, San Francisco-based, I think it's dynamic pricing, it's in your segment, and then Cloak in the tours and attractions. So these 2 were above 100 million, but there are a lot of smaller ones, and the mega rounds are really missing at the moment, and maybe are not needed for the ones which have turned into profitability. I wouldn't read too much out of it. I have to say it's so much dependent on mega rounds. If there is another mega round in the US, then the slide will look completely different. But what is interesting, I looked into rounds above 100 million, and there is only one which was B2C, which was Cloak. If I'm correct, maybe you can correct me if you have other data.
No, there haven't been many lately.
And that was the only one that was exactly $100 million. But there is a lot of B2B ongoing still, but on a B2C side, I think that's part of the chart here. And in Europe, we have seen a lot of, and it's also nomenclature, sometimes it's travel or not. I wouldn't read too much out of it. I think the most I read out of it is that the US guys are less intense on dedicated travel as they have been in the past.
Yeah.
For me, there is one that still justifies part of that, and we're seeing every time more and more, which is America has a very good closed markets that help a lot raising money. Now, the valuations there typically are about 10 times the ones in Europe for companies with similar numbers. So a lot of the things that we're seeing is American money coming to Europe, where if the rationales are the same, means the return on capital is way higher. That's why most part of the big rounds that we're seeing in Europe are not by European VCs, but by American VCs. So the return on capital is clear that you rise in America, you invest in Europe, and the fundamentals justify it. Yeah.
Right. Okay. We got to get to AI. So yesterday, the focus of my presentation was on the effects of AI, on the market. So some of my main hypotheses on funding being down, due to what's going on with AI is how core AI companies outside of travel, are eating up a lot of available funds. Also, just investors being uncertain about how AI will change both consumer behavior and how the industry operates. And then AI enabling startups to do more with less funds. So do you agree with these hypotheses?
Absolutely. Yeah, I think we've already mentioned about that every startup they should be using AI tools to gain more efficiencies and be able to deliver more with less. From our point of view, the adoption of the AI in travel is going to be transforming. So it is going to be hopefully it is going to help us to solve some of the big industry problems. Going back to fragmentation. With agentic AI, 2 days ago, just the first day of the conference, I was talking to one of the startups over here, and I promised him that I'm going to give him a shout out. His name is Campy. So what he's proposing is to be able to use agentic AI to make phone calls to the camping site that is so remote that maybe will be booked 3 times in a year. Right? So these are the types of contents that is to the deep end of the long tail. That in the past, it is hard to justify a dedicated API link. Now, it is hard to justify putting a complete digital infrastructure to be able to get those last piece of travel content onto the platform. But now, maybe with the agentic AI, with the new infrastructure, we're finally able to get super long tail content in at scale. So it is one of the inspiration I've got from this conference this year. So it's like new ideas is being enabled into the travel industry.
Without trying to put water into wine, and I do fully agree with what you said, Suzanne, is again, I remember I've been a lot of years in Booking.com, and image recognition, chatbots, generation of new destinations, all was done based on AI since 2004, 2005. What I mean, again, is not new in the industry, though what I'm seeing is a lot of companies like B2Cs, they come and say, I got an OTA, okay, that's the valuation. Okay, you got an OTA with AI, and suddenly they rise by 10 their valuation. You got a deck of a new couple of guys, it's worth 1.5 million, but we are AI driven, okay, 10 million. And it's like, there is a lot of, I wouldn't say BS, but there is a lot of, we need to understand that the fundamentals of AI are American companies, and you don't see those many AI-driven companies really born into AI. You see a lot of people that adapt existing technologies to the current operations, which is not changing the fundamentals. But
I think that's really interesting to listen to both of you because you are so much focused on travel. I think the problem we have, the kind of disruption via AI, is a problem we find in all verticals. And remember that marketplaces, the biggest funding in travel got into marketplaces. And the disruption, the AI disruption happens to all marketplaces, whether it's travel, whether it's whatever, even B2B marketplaces are disrupted. So that's why I would really split between what is the AI disruption in general in terms of efficiency and in terms of defensibility of the business model, in terms of writing code faster, in terms of copying good things faster, and what is travel specific. And then if you really think it through, it's not too much really travel specific. And that's why I think the topics we are facing here from a travel perspective are facing to all marketplaces, to all industries. And the boost, I'm totally with you, with the boost in terms of valuation, which founders think they get if they claim it as an AI, let's say, powered use case, I think that is the nice try in every business. And what I like, but what I like about travel is that it's so much more plannable than other industries in terms of the long-term demand. Because it's a basic need which will never go away. You have other industries where you confront more trends. So that's why I think investing into travel, the use case and the kind of flow of conversion from discovery to conversion is something where I think in travel you can spend more money because you better understand that is a need which will stay. Yeah, it's true. And one of the things, I'm not envious of you all about is like, I don't know how you'd make investments right now with a 5 to 10 year exit horizon in the face of so much uncertainty about, consumer behavior changing, like I said, even distribution potentially. And I wanted to do an audience poll. So if you have your blue and your red smiley faces, so show us a blue smiley face if you do think that AI and AI agents will be a hugely disruptive force to the industry and will change a lot of things, almost everything. That's a lot of blue. I see 1 red, 2 reds. So then show a frowny face if you think, won't change all that much about the fundamentals of the industry. Yeah, okay. So I do not envy you all on, how you make these decisions. Are you doing anything specific to help your existing portfolio companies, make adjustments who are sort of built before the AI revolution? I can quickly start. I think what we've figured out is go really deep into the value chain and get a defensible position either in supply and or demand by really adding, let's say, deep connect into the value chain. Because just a marketplace without a deep connect into the value chain itself is not the future, in my view.
Yeah, okay. I think for us this is about getting the feedback from customers. Right? So what we can help our portfolio companies is expose them to more ideas, more suggestions, more feedback channels. I think in a market where technology is evolving so fast, it's all about how to meet the real life requirement of your customers, whether it's as a consumer or whether it's as a business.
So you are an OTA. Are you supply driven? Are you price driven? Or you are AI driven? But if all you do is invest in one thing that is a tool for you, so you are not an AI first company, careful and vary with how you invest. Though if you go too slow, you might be out of the market. So the pace is very important in the investment that you do.
Yeah. All right. Thanks. We're out of time. Really quick lightning round. Okay. So very quick answers. Which city will spawn Europe's next Traveltech unicorn? And you can't say where you're from.
Amsterdam.
What?
Amsterdam.
Can't think too long.
So I would say, yeah, I agree, Amsterdam.
Yeah.
To Amsterdam.
I still think London is the city to go.
Yeah. All right. Within 5 years, we will see a $1 billion travel startup run by a team of 3 or less. Yes or no? Due to AI.
Yes.
Yeah.
Yes.
Wow. And then, as people have talked about on stage up here yesterday and today, is it time that we just stop talking about AI because it just is what it is now? We just stop using the word, I don't know. We just have to talk around it, yes or no?
Yes, it reminds me to the mobile discussion 15 years ago.
Is it just too much now?
I like the answer, yes. Yes, at certain point in time, it's just so integrated. So we don't talk about electricity anymore.
Yeah, it's like being obsessed about the internet. It's happening, guys. So it's like, but we cannot talk about it. Just do it. Yeah.
I don't know. I think we have to talk about it. It's all anybody wants to talk about. So I say no. But thank you all, Christoph, Toni, and Suzanna. Thank you.